What is going on, ladies and gentlemen? Happy Money Monday. It is September 13th, just after 1 p.m. Eastern Standard Time. We were waking up this morning to all of the indexes looking green. But then as soon as that market opened, everything just crumbled and fell apart. If you look around the board as well, last week, a lot of people were struggling. A lot of traders were struggling because of this market and the change in the environment. So you got to adapt, keep an open mind, and look around and notice what's going on all around you. Are you noticing consistently profitable traders on Twitter? Are they struggling? Are they having green days, red days? Something to think about, take into consideration. I don't post much really on Twitter, but I do pay attention to my surroundings and what other people are saying on Twitter. Twitter is a very, very underrated tool that should be utilized by all traders. So real quickly, let's pull up the SPY and we'll break that down real quick. The SPY was looking good this morning. It was gapping up. Last week, the indexes just got hammered 5 straight days last week. So 5 consecutive red days. Going into today, Monday, with the futures and indexes gapping up, everybody was thinking, all right, bet we're going to have a good bounce day on Monday. But that dream was quickly destroyed and demolished as the SPY just completely sold off. And now it's just been finding support right at 445. You want to see it start to base out though. This is looking good. Let it base out. Who knows which direction it could go? It's currently resting. We're in lunch hours. With it resting like this, at the end of the day, who knows? It could decide to push up, or it could decide to fall back down even lower. So we got to take it day by day with the indexes. So let the SPY rest, base out here at 445, and later on, let it tell us which direction it wants to go. So let's talk about the stocks that were in play today. First up, ATER. Looking up at that daily chart, this stock has just been on a roll for 1, 2, 3, 4, 5, 6 straight days. ATER has been on a roll. Scrolling out on this chart, just look at that ramp. From 650 all the way up to a high of $19 today. Right out of the open, just explodes from 14, runs up to 1550, pulls back down to 1420s, and gets a nice run all the way up to 19. Since it's topped out at that 19 level, it's pulled back down to about the 16 level. We may get one more good bounce on ATER. I can definitely see this potentially making a run at the end of the day here, all the way back up to potentially 1850. It can run to 1850, 1750. I'd play it safe. I'm going to say 1750. So from here, that's a dollar upside right there. If this falls down below 16, kiss it goodbye. So looking at this, if you were to develop a plan, you're risking around 50 cents to make upwards of $1 or $2 per share. So let's say you're going with that $2 price target, right? You're risking 50 cents to make $2. That's a pretty good risk versus reward. That's a 4-to-1 risk versus reward. So at least one more bounce, I think, on ATER. I like the 10-minute on this. I like the way it's pulled back. Now it's gearing up. Slap a trend line on this bad boy. It broke up over that trend line. Now it's pulling back, holding the trend line as support. From here, we can get that nice lift up to at least 1750, 1850. Chances of it breaking its high, who knows? We'll reevaluate it if it gets up to our price targets first. That's how we want to go about this. We just take it a level at a time. So ATER, we'll keep this bad boy on watch. Somebody in chat mentioned LIFE. Now LIFE, this was a good run this morning. This morning it had a good run from just under 6 all the way up to a high of $8. Let's see if there's a catalyst. So they put a price target on this bad boy from $13 to $18. An analysis comes out, puts a price target on this. People and traders get excited for when analysis put price targets on these stocks. It's pretty much a regulated pump and dump, I would say. So people get hype on that. This had some pretty nasty death candles here. A fake out right here from 815 slams down to 775. A death candle here from 772 down to 734. So this has got about an average true range on the 1 minute of around 50-40 cents. I would stay away from this thing. I don't really like it too much. It's too sloppy, to be honest. A bit too sloppy. You gotta have a lot of patience with this thing. I think there's a lot of people trapped in on this. If it gets up above $8, I'm gonna say $8 is where volume could potentially come back into this bad boy. Looks like ATER trying to get a lift up to that $17 right now. So far, it's looking pretty good. If it breaks up over that 17, it's going to skip up to that 1750. You just got to be patient with these types of plays. If you see what could potentially happen, you got to trust in yourself that you know what you know and go with your plan. Most new people, they don't have enough time under their belt, and when a stock starts moving up like this, they sell it to the first pop because they freak out. They look at their P&L and they were down, 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 holding onto it. When they finally push over into that profit, they freak out and then they take it off the table, and then they watch the stock continue to push and push and push. There's a lot of volume on ATER. This thing's got 170 million in volume on the day. It's trying to get up over that $17. Will it happen? I think it does. It's got the volume. Just got to be patient with it, like I said. You want to get in practice with your screen time watching. Just sit in and watching these stocks, guys. By sitting and watching these stocks, you get familiar with the stock's personality. All stocks move differently. They do. You got to look at every stock as if they're individual people. Every stock is going to move differently than one another. So ATER, someone else in chat mentioned AEHR. AEHR has been a nice uptrend all day from that $10. Nice run all the way up to almost 12.50. So there is opportunity out here, guys. There is. I keep looking back over at this ATER. It's really testing that 17 bucks. There you go. ATER. Nice push up over 17 real fast. That's why you don't go off and chase after these types of stocks, guys. Here at Trading Learning 101, we teach you guys not to chase after these types of plays. We teach you to try to anticipate and see it before it happens. Because if you were that type of person, you're like, okay, I'm going to wait for this to push up over 17 and buy. Well, if you would have done that, this thing quickly snapped up to 17.20 and then ripped all the way back down to 16.60. So that's a 60-cent downfall. And you market ordered in, let's say you did. So you market ordered in, it filled you at 17.20, and then they flush it down to 16.60s. That's a 60-cent downfall. And then you freak out, and then you market sell out and take a loss. Not a good way to go. Most definitely. Real quickly, you guys, I just want to give a shout out. If you guys haven't already, I have a Twitch channel. Go off and follow my Twitch, you guys. I would greatly appreciate it. If you guys want, I'll put the link in the chat for you guys. I'm always on Twitch streaming the stock market, or I'll be on the side playing baseball or video games. Come hang out and chat with me. Ask me questions. I'm a pretty open guy, so I don't mind hanging out and talking with you guys, answering your guys' questions about whatever, whether it be about trading, psychology, emotions, stock market. So let me share that link with you guys there in the chat. Again, I'll appreciate it if you guys give me a follow. All right, so what else did we have pop off today, guys? We had a few stocks pop off. We had BBIG on everybody's watch. We said in the pre-market prep, BBIG, let it start to base out and build up off of that base. That base was at around that 1050. And we like to say if a stock is strong or if it's tradable, let it prove to you that it's tradable. We thought a base was forming there at 1050. We said, all right, let's see if it could start building up off of that. When you look at the bigger picture, this isn't a confirmed downtrend. It made its high way back last week on Wednesday. And since then, it's been making lower highs with lower lows. So with it basing out here at 1050, all right, now let's see if it could start building off of that base. Well, when the market opened, it said no, 1050 is not going to be the base. We're going to drop it down here to 960s, 950s. And it comes right back up, and now it wants to hold $10, with 1050 now being resistance. So now if this can start holding 10, and it's got 1050 resistance, let it prove to us that it's ready and it wants to start spiking. So this needs to get back up over that 1050, hold 1050, and work its way up to 11 and then 1150. BBIG, you're going to want to take this in 50-cent intervals and work your way like that. It's all about how you guys look at these charts. That's why I preach to you guys. Sit and just break down charts. Break down charts. Look back and actually zoom in on days in the past. How did it make its move from here up to here? How did that happen? Break it down. Candle by candle, time frame by time frame. Put the story together. You're a detective. Remember that. You're looking at the crime scene, looking at all of the clues and putting it together to tell the story, right? So BBIG, everybody and their mother has this stock on their watch list. Every single day it's been doing average around 150 million in volume. The past, what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. So the last 11 days, BBIG has done over at least 150 million in volume a day. Yeah, everybody has this on their watch list. So with that in mind, you know everybody has this on their watch list. Sit and wait. Take it level by level. Don't try forcing or bottom picking. That's what stupid money does, right? Stupid money is out here trying to bottom pick or top tick or top pick on these stocks. We had EFTR, the #1 gapper this morning, pretty much. This was a recent supernova stock running from $9 up to 20, back down to 11, running up from $11 all the way up to $40 a share. That's insane opportunity out here, guys. Look at that. Amazing day right here on this stock last week. People are going to have this on their watch list days following. They're going to look at this stock and say, wow, look at it, how much money I could have made on that stock. It could do that again. I'm going to keep tabs on this stock days after. And look what happened days following on EFTR. Every single day it spiked at least $2 or more per share. That's opportunity, guys, right there. So let's zoom in. You had your one big spike day here, another big spike day here. Then on day 3, right out of the open, this stock went from $24, runs all the way up to 35 bucks. So an $11 spike to the upside, all within the first 14 minutes that market opens. A $14 spike to the upside. A measly 1,000 shares, guys, from bottom to top. That's what, $11,000. That's life-changing money. Not money to retire, but that's good money, guys. That's about 3 months of work for the average Joe. A quarter of a year's work salary. So that's one day right there. Then on day 4 right here, let's zoom in on that one. Right out of the open at 29, this thing fires up to 32. That's a $3 spike in 1 minute. 1,000 shares, that's 3,000 bucks. Today, what did it do? Great pre-market from 25.50 rips up to 31. That's a $6 spike. Then right out of the open at 29, rips up to 32 again. And all you really had to do on this thing, when you zoom out on this, draw a trend line, connect all of the lower highs. Look at that wedge it formed every single day. It spiked right up to that trend line. So you could have just played that trend line. And then today it broke out of that trend line and fired up. Simple technical analysis, guys. Keep it simple. You guys don't see me out here with all these indicators on my charts. I just simply pay attention to price levels, price action, and volume. That's it. That's it. Start overlaying things, start complicating things, and we've asked Google multiple times, why do people overcomplicate things? Why do people overcomplicate things? And this is what Google says. The answer, perhaps, to why we overcomplicate things is because that's the easy thing to do. Ironically, it takes thought and effort to keep things simple. And that's what makes it more valuable to us as humans. It's a lot of truth right there, guys. Keep it simple. Simple, simple, simple. And you even hear a lot of the gurus out there. What do they all preach to you guys? The KISS method. Keep it stupid simple. Simple, simple, simple. We also had TMC. Someone called out today in chat. TMC, this is a newer IPO. It opened its IPO Friday. And Friday, they open it, tanks all the way down to $8. Starts crawling back Friday. And then today from 950, it's been just in a straight uptrend. From 950 all the way up to 12. That's about a $2.50 move to the upside. That's good opportunity. So, looking at the 10-minute, this has been trending up very nicely. This could be setting up for an euphoria run later on today. If you don't know about the euphoria run with these grinders like this, you need to be joining the Trading Learning 101 Discord where we teach you guys all of this stuff. We're all out here to take advantage of the easy money type of plays. So TMC, this is looking good for a potential end of day run. AMC, this was getting a good gap up this morning. Finally gapping up over that 50 bucks, up to 52. A little sloppy morning, but that's perfectly normal. Thinking of these stocks as people, right? Nice gap up, spikes and perks in the morning. It's a nice pullback. It's when I look at pullbacks, a stock is resting. It's pulling back and it's building up that energy to push up and blow up even higher. But not all pullbacks are the same. Remember that. AMC gets a nice pullback back down to 50.50. Previous day's close, that blue dotted line, almost kisses it. 50.50, nice uptrend all the way back up. Now it's hitting 53 just about. AMC, this can run back up to 56, 60 bucks. So watch for this to potentially explode at the end of the day. We had TKAT pop up real quickly. Real quickly. If you follow TKAT for like the last, 8 months, you know TKAT has a lot of just random big explosions on it. And that's simply just from short sellers covering positions. So real quick, pop on TKAT from 870s, rips up to 1025, $2.50 spike on this bad boy. And now it's fading back out. You got to know the difference between an actual strong, healthy spiker or a short squeeze. And all that TKAT was just a quick short covering their position, and it got a quick pop. You'll see this a lot of times on random stocks sometimes. They'll pop up and just surge, and then they'll just slowly fade back to where it came from. And all it was, like I've said, guys, it's just a short covering their position. That's all it really is. Sometimes things can get out of hand, though. If a stock is overcrowded with shorts and one big short covers their position and it spikes it, it could freak out other shorts. And then they all start covering. And then that's where it could potentially lead into some huge supernova parabolic runners. It's a beautiful thing. IRNT. Let's talk about that one. So IRNT had a good run on Friday. Friday here, this thing went from $18 a share, running all the way up to 24 bucks. I mean, come on, guys. This is where the money is. Stop paying attention to them stocks that are $1, $2, day in and day out. These stocks from what, $6, $7 to $100 a share. These things be running dollars at a time, guys. And you don't, when a stock is running more than $1 or $2 per share, you don't need that many shares to make good money. I mean, heck, a lousy 250 shares on a stock that ran from 18 to $24, that's a $6 move from bottom to top. All you need is maybe $1, $2 out of that whole $6 spike with 250 shares. That's a potential $250, $500 in your pocket in a day. Think about that. Most people have to work almost a week to make that type of money. That's pretty good. So something to keep in mind, guys, in this market, majority of people consistently lose money, right? A lot of people consistently lose money. So anytime you take a trade and you're up in profit, protect that profit, especially when we're in September. I've ranted and raved and I warned you guys, September is the crappiest month of the whole year in the stock market. It's always has been. My 6 years, September has always been the crappiest month. I've lost a lot of money trading in September. So when it comes to September, I gear more towards playing defensively. I'm showing up every day and then I'm leaving as quickly as I can. I'm not trying to hang around afternoon or the end of the day because you're going to see a lot of fake outs, shakeouts, failed breakouts, failed follow through, a lot of randomness, choppiness, light volume. It's just not worth it. Just sit on your hands, wait. Markets will heat back up again. They always do. Indexes are getting shooken up a little bit, like a Yahtzee cup. So while that's happening, I'd rather just sit back, let that Yahtzee cup shake, and then once that they roll the dice on the board and we start to see a direction of where everything wants to go, then I'll step back into the ring and I'll join the party. Right? This sounds pretty reasonable and logic, right? So this morning, I got in, traded, done. My number one goal starting out for the week, I want to start green. I want to start off on the right foot. I don't care if I start off green $100, $1,000, or $5,000. As long as I can start off green, I'm going in the right direction. So this morning, I was trading scared. I seen the indexes were falling off and having morning dips. I've known and seen on Twitter a lot of traders have been struggling. So I want to get in, get it, get out. So this morning, I traded EFTR, made 586 bucks on that. Then I traded ATER, made $210 on that. And I traded ARQQ, made 230 bucks on that. 3 for 3, up $1,000 to start off Monday. Heck yeah, I'll take that. EFTR. Let's look at that real quick. EFTR, this was the trade this morning. So this had a nice flush right here, and it got drilled down all the way down here to 29. From 29, this had a good bounce up to 31.50. So a nice $2.50 bounce. Real quick, scalp opportunity right there. We called this out in chat. We drew trend lines on it. Pulls back to that 29.50. We said, all right, let's let this thing gear up. Let 29.50 hold as support. Be looking to sell when this hits and surges up to VWAP. So let's pull this up on a better looking chart. Thinkorswim charts are just ugly looking. So EFTR right here. This was the number one stock gapping up. We know that. It's got volume. Gets a nice pullback right here and pulls back right here. Nice pullbacks. Finally breaks up over that trend line here. And I like it right here as it comes up to the trend line. The magic number in the stock market is 3. Things like to happen in patterns of 3. Remember that. See, even for some of you guys, you just learned a fun little fact just by watching this. Now you have more of an advantage over everybody else. There's just so many little tiny details that you guys got to learn and know about to have an edge in this game. So 1, 2, on the third try, right there, it finally breaks out. I look at this as a micro pullback. It made its low here at 29, perks up, gets that micro pullback. Micro pullback building up to blow up over that trend line. So from 29.50, you have your low. I'd be putting my stop just below where the low is on that chart. 29.50, boom, Nice explosion on that. And right up to the VWAP. That's the price target. VWAP. Everybody and their mother and their grandchildren all have VWAP plotted on their charts in today's markets, guys. So I want to be looking at what everybody else is looking at. Everybody, pull them all up on YouTube. They all have VWAP on their charts. So I'm going to use VWAP as well. So good opportunity on EFTR. Nice solid execution. Picked up a little 1,000 shares, made a quick 500 bucks. Also traded ARQQ. So ARQQ was a tricky one, but this is about adapting to what you're seeing. We had ARQQ on watch this morning. It had a good perk. Pull it up on a better looking chart. ARQQ, if you zoom out, this was a recent big runner right here. And then the next day, after that big gap up, this thing had range. Look at this thing. Right from the open, goes from $14 to $19. A lot of volatility on this type of stock. I love these types of stocks, guys. Love these types of stocks because you can easily get in, get out, and get a good piece of the move. I love stocks that rip dollars. I do. Because you can also, you don't have to put up or buy that many shares to make good money. Versus you're trading a stock that's like let's say 40 pennies. You need to buy like 200,000 shares of that stock. Whenever you have more of something, guys, your risk goes up exponentially. Remember that. So I don't need to put up many shares to buy something like this. So if I get a good move in the direction, it's good profit, and I have such small shares, it helps me manage my risk better. So with ARQQ, right from the open, it opens up here at 14.75, rips all the way up to $16. That's a $1.25 rip right out of the open. Pulls back here just below 16. We were keeping an eye on this. We said if it breaks over 16, that's where it could start ripping and exploding. Now keep this in mind, guys. You can put together a trading plan, but it does not mean it's going to play out to the T. You need to adapt to what you are seeing current real time. And then 10 seconds may go by and things could change. It's like forecasting the weather. It's so hard to forecast the weather. Things may look good right now. It's nice and sunny out, but then 20 minutes from now, a big gray cloud can come in and start raining and ruin your picnic, right? So we were putting together a plan on ARQQ. This was gearing up just below that mental $16. Zoom in a little bit here. So gearing up just below that mental 16 bucks, right? Spiked right up to it. It's getting a nice tight pullback, gearing up to push up over that 16 bucks. And as soon as this ripped up over 16 and it popped 16.20, we're watching the tape and it's just where it's not getting that explosiveness and volume isn't running in and attacking it. You need to stand up, put your foot down, and say, hey, I'm not seeing strength on this stock. I'm bailing. I'm getting out. I don't want to be holding the bag while this thing crumbles and falls apart. So I'm going to trust in what I know and what I'm seeing and take action. Get out. It's stalling out. When we see stocks explode over huge psychological levels like 16 or whole dollar levels, I want to see it go kaboom. Sorry if I blew your guys' eardrums out, but get what I'm saying. I want to see that explosiveness over that 16. This just popped up like a little firecracker, fizzled out, and now look what happened to it. It fell all the way down to 15.20. It fell all the way down $1. So I got in on ARQQ this morning just underneath that $16. And when this ripped up over 16 and I noticed and seen it was stalling out, I aborted the mission. I got out. And I was able to walk away with profit. So see, I got rewarded for noticing that the stock was stalling out. And it fell all the way down $1. I don't want to be holding on to a stock when it falls down $1 per share. So the last trade I took, ATER, 1,000 shares, little $200. I'm trading scared in this market right now, guys. I see across the board a lot of people are struggling to pull in consistent profits. So I'm going to be super tight and I'm going to play defensively until I start to see markets change and I see stocks running up all day effortlessly and nonstop and easy money plays. This is a pretty hard market to trade in right now. And you got to be thankful for whenever you have green. Remember, people consistently lose money in the stock market. Consistently. So be proud of yourself if you've pulled in $25, $50, $100, $1,000. Be proud of that because most people can't do that. So it's 2 p.m. Markets are about to close here in 2 hours. I'm up on the day $1,000. Do I go for more? No. I secure that bag, guys. I close my broker up. I hit the X. I secure my profits. And I enjoy the rest of my day. It's Monday. I'm starting out the week really good. $1,000. Now I have a base I can start to build off of for the rest of the week. With that $1,000, I can keep going up. I can take a mistake if I want to, or if I run into it, it's not going to hurt me. I can manage my risk. Now I have something to build off of, is what I'm getting at. So Mondays are very, very, very important, guys. And you can easily turn in the wrong direction because we have Saturday and Sundays off. So what happens? You get 2 days off, you get anxious, get excited. Monday, you start to see some stocks gapping up pre-market. It gets your adrenaline running, and you get that FOMO, fear of missing out, and you get an itch in your finger because you're wanting to buy right when that market opens because you're going through withdrawals from not trading the last 2 days. You studied and looked at charts all weekend, get a big head, and going into Monday, market opens, you immediately go red. Now you're starting your week off on the wrong foot, right? You're down starting the week. Now you got to dig yourself up out of a hole. It's all about your mental game, guys. Mental. That's why a lot of people fail in this game. They don't take psychology, emotions, and the mental aspect of trading seriously. They simply just go off of technical analysis, chart patterns, or one of my favorites, they like to compulsively buy. They see a stock like ATER, they compulsively buy, and then they don't have a plan, they don't have an exit strategy, they don't have a profit target. It's just downhill from there. So this is turning out to be a really good stream, guys. It's been about, what? I did stream Friday, but it really wasn't that long. But it's honestly been about a couple weeks since I've put out a good stream for you guys. Lately, going into the end of August and the last couple weeks in September, I've just been on coast mode, guys. I know from my past experience, September sucks. And I'm not trying to be around in this market in September. The goal is you want to protect what you've made in the summer. Go out and enjoy it. Enjoy what you've made in the summer. Let September pass, just like Billy Joel from Green Day got a song titled Wake Me Up When September Ends. Let September pass. Then we got October, November, December. We got 3 months left of 2021. The last 3 months of the years, guys, it's going to get hot, especially around Halloween. Things are going to start picking up, and we're going to see a lot of like low float stocks start to pop off and go. And then going into a fresh new year, 2022, we go into that January effect. Statistically, January, the most stocks rise out of the whole year. LIFE, nice push all the way up to 850 off of 7. So a nice $1.50 grind there. That was a good call out, Rome. That worked out for you. DMC, that was also a good call. So for you guys going in, see, there's that euphoria run we were talking about. We got that right on video too. Just goes to show you guys, you can predict pretty much what's going to happen. If you rewind back about 30 minutes ago, what did we say on TMC? It's been grinding up with an uptrend. It's looking good for an euphoria run later on. Even in the chat, right up here, where is it at? At 12:51 p.m. So an hour ago, I said that stock TMC is trending up on the 10-minute. You might get that euphoria run later. That was at 12:51 p.m. Right here. Right here is where I said that. So from $11.50, $11, let's just say 11. So from 11, this ran up $3 a share. Boom. That's how you guys do it. How did I know this? How did I see this? I've been doing this for a while, you guys. We see this stuff all the time. So beautiful call out bringing this stock up, Nick. I posted the chart, gave you the heads up. That's what we do here. We work together as a team. And we see these setups before they happen. Now that it's spiking, it's too late. It's made its move. Whenever you guys see a stock spike and go, don't ever chase after it. It's always too late. Go back, break it down. All right. How did the stock get from here to here? How? All right. I'm going to zoom in on this and break it down and put it together. That's how you do it. There is no indicator. Rich C, you've been with me for a while, man. You've seen me many, many times in the past talk about stocks trending up and then getting that euphoria run. We've seen this multiple times. Look at the 10-minute. It held trend. It held trend. And when a stock holds trend like this and it just trends up like that, you get a blow off. Does it happen all the time? No, but we do see it happen a lot. Yeah, this Streamlabs, it's the I don't know, the volume's always hit or miss with it. Because I'll go in and I'll mess with the settings and then it'll be crystal perfect clear and then I'll close it. Next day it'll be out of whack again. It's like every streamer, it's a constant always battle with tweaking with your audio. So TMC, that was a good, beautiful call out. Beautiful call out. That's what it's all about, seeing it before it happens. Because now this is going off on everybody's stock scanner. They're all chasing after it. Smart money is now selling to the dumb money. Who knows how far this thing goes? Only 4 million in volume on the day for TMC. Then when you look at something like ATER, this stock has 183 million in volume. 183 million. That's insane. I've always found it stocks with lower volume, you want enough volume to trade it so you can get in and out. But the stocks that have significantly less volume than the stocks that have insane volume are easier to trade. Whenever you have too many heads on something, it just leads all into headaches, right? Like when you go shopping, too many people in the store, it's going to take you a long time to check out. All right, so TMC reopens right here at 1450. Watch for this to pull back down and hold right here at 1378. You're going to want to see it hold up right here. And then from that, watch it blast up. Watch this thing skip up over 15. Watch how fast this thing explodes. Boom. Just like that, up to 1540. So from 14, rips up to 1540. A buck 40 in a minute. Look at that volume spike. 500,000. Volume's just pumping into this thing now. $4.6 million. Volume, volume, volume. Volume is so important, guys. So important. Volume trumps all. Just remind yourself, guys, if you're looking to trade this stock right now, currently, right now, you have your finger on the trigger, you're looking to buy. Take a step back and tell yourself, hey, the stock already made its move. Why am I looking to buy up all the way up here? This stock just went from 11.50 up to 15.50, a $4 run. Why am I trying to buy into something like that? Beautiful, beautiful move. That's what it's all about, guys. Go back, take a snapshot of this chart. If any of you guys have a desktop or a laptop, there's a tool already built into your computer called snipping tool. Have this handy. Go to mode, take a full window snip or take a rectangular snip, create a file, and save all of these charts. Break them down, save them, study them, learn from them. That way, in the future, you see something set up, you're going to be like, ah, this looks familiar. I've seen this setup before. Adam, oh dang, I'm getting in right now. Those were the famous words of a rookie. Look what happens. If you were to get in on that little pullback, this thing's pulled back now $1. Now you're hoping it comes back up. I don't want to be on that hope team. Hoping is for fools. It's made its move. It's made its move. From $9.50 up to $15.50, that's a good run. So you guys, that's a big important thing when taking snapshots of these charts, breaking them down, studying them. All of us, all of you guys, each and every single one of you, we all have different personalities. We all have our own set of eyes. I'm going to see patterns on this type of chart that none of you guys would see or pick up. You guys are going to see patterns that I don't see and pick up on these charts. We all look at charts differently. We all pick up on patterns differently. That's why it's so important for you to put in the work, break down these charts. And what do your eyes pick up? What do you see? Because I could teach you and be like, hey, you want to look out for this and for this to happen and for that. But it doesn't necessarily mean it's going to be second nature for you. Get what I'm saying? And doing that as well, I'm implementing in your brain a pattern, and going forward, your eyes are only going to be looking for what I told you, the pattern that I taught you, and you're going to overlook the simplest things on a chart because you're going to be focusing too hard on seeing something that potentially may not even be there. We'll see what happens with TMC the following days. Lately, all of 2021 has been a pretty good year, I would say, for IPOs. Most definitely. A lot this year. We've seen IPOs open. They may not do anything day one, day two, day three, day four, but we've been seeing a lot newer IPOs that have been open for a week, 2 weeks, go on good runs. A lot of IPOs, a lot. The stock market is very trendy, guys. Remember that. Very trendy. So that's why it's important to always show up, keep an open mind, and be very observant on what you see going on across the board. ISEE just had a good squeeze going in on it. See it clear as day. They consolidated it for the longest time right here. And then they dropped it down. And when they drop it down like that, shorts start to attack it. They go like, oh, it's broke the down, it's short, it's going lower. And it comes right back up to the area it broke down from. Shorts all put their risk just below or above the highs here. So shorts are putting their risk all up here from back here, and they're all jumping in and overcrowding because they're like, this is a wedge breakdown and it should go lower. That's what they say. Then it squeezes up because it's triggering all of their stop losses. Shorts, in order to get out of their position, they have to buy to cover. So it's good to know also, guys, how shorts think and how longs think. There's two ways to this game. People ask me all the time, why don't I short stocks? It's simply to put it, I trade small cap stocks, guys. Garbage companies. In the small cap land, shorting is so overcrowded, it's unreal. It's so competitive. And also, you have to buy. You have to pay money out of pocket to find locates, to borrow the shares. You got fees to pay when shorting. The popularity from brokerages switch up every year. You have to have multiple brokers open because one year it may be hot at Charles Schwab to find easy locates on small cap stocks. Then the next year it could switch over to E-Trade. And then the following year it could switch over to Centerpoint Securities. So the popularity is always switching from year to year. It's just so much more work. That's the way I look at it. And with it being overcrowded, which it is, leads to some really great short squeezes. Really great short squeezes. So I look at it as I get much more of an enjoyment just sitting back, waiting, and searching for that next short squeeze. And when they happen, oh, it's a beautiful thing. It really is. Just like ISEE. Break over 15, this thing's going to 1550. Then if it breaks over 1550, who knows how much higher this could go. How's our ATER doing? Oh, would you look at that? Right up to our 1750 level we said it could run up to. Now the next stop it could run up to 1850. So rewind back all the way to the beginning of this stream. We were just talking about ATER. I said, good possibility this is going to bounce up to 1850. A nice $2 bounce. So far, we're halfway there. Nice build up. Nice build up. Put in its bottom here at 1560s. Slowly starts building up. 1550s to 16. Then it holds 1625. Then holds 1650, 1675. See how I'm taking it in levels, guys? I'm also using the bigger time frame to paint the big picture. The SPY just keeps going lower and lower and lower. So now, guys, perfect example. What do we just talked about earlier in this stream? The SPY had its morning sell-off. Then after its morning dip, it goes into consolidation mode, resting. All this is pretty much is a range, back and forth range. It's resting for its next move. Lunch hours. So now going into the end of the day, we don't know which way this wants to go when it's in consolidation mode, resting mode. It's a 50-50. It could go right back up or it could go down even lower. This scenario, which way did it choose, guys? It's going down lower. So now watch for it after it gets driven down to come back up. And then this resistance here, or support, watch for that to hold as resistance. And then continue to get driven down. Listen to the market. Don't try to predict it, guys. Listen. That's where a lot of people fail. Nobody can tell you what's going to happen with the SPY overnight. Nobody. Nobody. Nobody's got a crystal ball. Nobody can travel into the future and see. All they try to do is make educated guesses. I try not even to guess what a index or a stock is gonna do. All I can do is find out and see which direction is currently trending, draw out my levels from the past, and use those levels as guides. Makes sense? Keeping it stupid simple, guys. Simple like that. Keep it simple. when you zoom in on this, you can see there was a clear top up here. And then you can see it slowly starts to like peer off, right? When it peer offs like that, that's when you get that panic. And it just goes boom like that. We've seen stuff like this a lot. It's all about how we look at the charts. Perspective. TMC, that's a really deep pullback. I think that's a bit too deep. And look at that. I know my lines. Came right down to my green line. Then it blew through it. Now it's acting as resistance. So at best, TMC, it bounces maybe back up to 1350, but that's a big pullback. This could pull all the way back down to like 1150. No, I'll say 12. ATER still doing its thing. Got to be patient with that one. Wow, this was a weird one. Look at that. This stock gaps up and then opens and gets driven down below its previous day's close. And then it comes all the way back up. But this is why, as well, we see patterns happen over and over and over and over and over again. If anybody tells you that patterns are bullshit, don't pay attention to patterns, run far, far, far away from them because they have no idea what the hell they're talking about. How many times have we seen wedges like this? It's a perfect wedge. It collapsed and fell down from that wedge. And if and when stocks come back, comes all the way back up and finds resistance right at that wedge where it broke down from. Comes back up. Now it wants to hold up as support right there. And from that gets a nice ramp up. See how I broke that down into stages? From a wedge, the area from the wedge, resistance. Then it comes back. Now it's holding as support. And from that, ramps. And it's at like a psychological level. People pay attention to psychological levels, guys. $1 every 25 cents, 50 cents, 75 cents, $1. Right there. $4 up here. $4.25. So if I was to go through and plot this out every 25 cents, right? So 375. And this is how you guys need to be looking at charts. Stop trying to focus on $3.65. Focus on the general area, the psychological general area. So below 375 is what? 350. From 375, what's the next level up? $4. From 4, next level up is $4.25. From that, $4.50. Focus on psychological levels. You need to be training your eyes to focus on these significant levels because nobody is randomly buying and selling. Let's say you're a multimillionaire, right? You have 1 million shares of this stock. Calling your broker up. Are you telling your broker to sell your millions of shares at $4? Or hey, I want you to unload the boat at $3.91, not a penny higher. You hear me? Yes, sir. Sell it at $3.91. Nobody's saying that. He wants that even $4. So start paying attention to those levels, guys. The only people selling at those random numbers are noobs because they have no idea what they're doing. If any of you guys are here, you're new to the channel, you like what you're hearing, I'd appreciate it if you guys hit that subscribe button for me. Join the wolf pack, hit that follow button. You guys go down in the video description there. I have all kinds of links for you guys. Books that I like, all of my social media accounts. We were just talking about Twitch. I stream a lot on Twitch in the stock market or while I'm playing video games. You guys see me streaming on Twitch? Come on through, say hey, ask me some questions, hang out. I don't mind you guys popping in, hanging out, asking me questions about the stock market, day trading, or anything in general. So it's good times. Come hang out. Any baseball fans in here? I stream and play a lot of baseball. So baseball is a real mental game, guys. And the way I look at it, it's a patient man's sport. It really helps with your mind. That's why I love it so much. You gotta wait for that perfect pitch, swing the bat, and it's a game between the pitcher and the batter. The easiest sport to pick up and learn, but it's the hardest sport to master. Just like chess. So also keep in mind, guys, the longer you progress and grow as a trader, you start to realize the growth of a trader not only happens inside of the market, but it happens outside of the market as well. You need to have that mindset growth. You're always growing and working on yourself, not only as a better trader, but as a better man and a woman as well. We're in this to grow. So this was a pretty fire stream, guys. We were firing on all cylinders today. And I hope you guys picked up a few tricks, learned a few things. It's been a minute since we've done one of these, and it feels good to get back on track as well. Recently had a few deaths in my personal life and the family and close friends passing away, but now that that dark cloud's gone and passed, back up on the horse, ready to rock and roll, firing on all cylinders. We got, what, 3.5 months left of 2021. We're on track to end this year out strong, guys. And then, if you're new here, we can go into 2022, fresh start, firing on all cylinders, ready for a great year ahead. ATER breaking up. Looks good, looks good. Working its way on up to our next price level, 1850. So we had two good call outs in the Discord. We put ATER and TMC on swings. ISEE, or ISEE, that was a good one as well. Really good. That thing's still going and performing. 1420 all the way up to 15. Nice solid 25-30 cent pushes on ISEE. The float is a bit bigger on ISEE, and the average true range is a $1.14. So from 1420, 1520, about 1550 is this push. Always try to look at the average true range, guys. That's a valuable thing to look at there. The average true range, the relative volume, the volume. I mean, we all know, and I preach, volume trumps all, guys. Volume is king. Relative volume, so 4.36, relative volume. This is telling me currently, right now, that this stock is trading 4.3 times what it normally trades. So that's a surge. That's a lightning bolt hitting this stock, right? That's volume hitting this stock. When you have a lightning bolt hit something, it's going to cause some movement. The float is 92 million. The float is on a bit of a higher side, but the thing with higher float stocks, you need more volume to really get it up and going. But there's a good way to look at higher float stocks, guys. You can look at higher float stocks. I like to look at them as if they're freight trains. That's the way I like to look at higher float stocks. Why do I look at them as freight trains? Hold on. Higher float stocks, I'm going to look at them like they're freight trains, because we all know once you get a freight train moving, and the heavier it is, the longer and harder it's going to take for that train to stop. So not one big seller can manipulate and hold that stock up. This stock is just going to keep blowing through until that momentum finally slows it down. That's why I look at higher float stocks like they're freight trains. Now you see a lot of gurus pay attention to low float stocks. It's just the complete opposite. A low float stock, you don't need much volume to get that stock up and going. So you can look at it like let's say a sailboat. Look at a sailboat. Get that gust of wind, that sailboat's going to start cruising. That's all it takes, a little bit of gust of wind. Get that thing up and going. That's why all these gurus out here, they pay attention to low float stocks. They got, let's say, 1,000 people following and watching them, and they call out a stock, and the float on it's only 1 million. That lightning bolt, 1,000 people hit that stock. It's like a lightning bolt, boom, and prices are going to skyrocket up. TKAT, look at the float, only 6.4 million. Look at the shot up it had. From 850 it rips up to 10.20. That's about a $1.50 rip right there. So going into the end of the day, guys, power hour, top stocks that I would have on watch: ISEE, ATER. But ATER, this is more of a swing type of trade. Your entry on ATER should have been way down here near 16 bucks. And you're riding it up to that 1750, 1850 level. This is a swing play all day. You guys got to know the difference in what type of trade you're taking with your plan. How long do you think it'll take? Is this a day trade? Is it a quick momentum opportunity that's only going to take me a couple minutes or less than a minute? Or is this trade going to take 10, 30 minutes, an hour, a couple hours? This is a swing trade. So always try to identify what type of trade you're currently taking. ATER, most definitely swing trade. Someone said SHLS. Yeah, this was a good move. This is going to run all the way up to 33. I'd be, well, just over, yeah, I'd be selling at 33. That's where I see this running up to. So about right now, pretty much. That's a good move. Pretty good move. The more time you guys get under your belt, I'm telling you guys, you're just going to start to see stuff over and over and over and over and over and over and over again. You are. But the thing that you're constantly going to battle is yourself. Yourself. When that person you look at in the mirror, that is going to be your boss or your enemy every single day. Your mind. LIFE is actually looking pretty good for a continuation. Going into power hour, it's now holding for old resistance right here as support at that $8 on the 10-minute. If it can hold that, most definitely push right back on up to 850, and then your next stop, $9. So from 8, see, there's some people out there, they'll do like, all right, I'll buy in at $8, and then I'll put my stop loss at 9 or 8, 7.95. So this is how they'll do it. Let me make this a little bit smaller. So they'll buy in at $8, and then they'll put their stop loss right down at like 7.95. And they'll be like, all right, I'm looking to risk 5 pennies. And then they'll put their price target and they'll say, all right, I'm looking to sell at 8.50 and I'll probably sell at like $9. So they'll go about it like, okay, I'm willing to risk 5 cents to try and make 50 cents in a dollar. Like, dude, that's so unreal. Like, you're just giving away money. You're just gonna die from 1,000 paper cuts. You are. You always want to try to give a stock wiggle room to move around. So going back to when we were talking about, start looking at stocks in 25-cent intervals, 50-cent intervals. Why not base your trading style and strategies and keep it simpler? Say, all right, I get in at 8, I'll put my stop loss at 775. So I'm risking 25 cent to make what, 50 cent? That's a 2-to-1 risk versus reward. That's not technically a good trade. Most traders want to go for 3-to-1 or better. So now with an $8 entry, you're risking 25 cent. Let's say our target's at $9. That sounds a lot better. I'm risking 25 cent to make $1. That's a 4-to-1 risk versus reward, right? I'll take that trade all day. Because with that style of trading, I can have 3 losers that are 25 cent, and all I need is that one winner to make $1. And I just made back in one winning trade 3 of my losses. That's how you guys need to go about this. So don't get discouraged when you guys take a loss. Keep it as small and minimal as possible and just move along. All right, we've been going for about an hour and a half, guys. I'm going to wrap it up. Great, solid day today, guys. You guys all in the Discord, proud of you guys. You guys are showing up every day, putting in that work. I'm telling you guys, those who stay, study consistently, work on yourself consistently, you will be champions. Those who stay will be champions. This is a game that pays off down the road. You're putting in all that work and time right now. Then those paydays come a year, 2 years down the road. This is something that pays off in dividends, as I like to say. Best job in the world. It really is. Best job in the world. So again, for you guys that are new here to the channel, I'd appreciate it if you guys subscribe to the channel. We want you in our team. Wolfpack. Let's go, guys. You're not going to see anybody out here talk about and teach you guys what I talk about on a daily basis. It's a mental game. Not about spotting patterns and triangles. It's a lot deeper than that. Just as Uncle Sam is pointing at you, the only enemy we face every day is ourself. Every day. So you need to learn about yourself, know your strengths, your weaknesses, and start revolving your trading around who you are as a woman or as a man. It's not about me telling you guys, hey guys, you're going to want to buy here and sell here every time. It's not about that. Because I have my strategies, but my risk tolerance could be a lot greater than some of you. I'm used to trading fast moving, volatile stocks. Somebody new come into this and they try doing what I do, they could freak out because they're not used to seeing volatile stocks, or their size is too big, for example. They feel a lot comfortable and at ease trading uh, slower moving stocks. It's a big mental game, guys. All right, I'm going to wrap it up. I'm ending the day up just over 1,000. Good start to the week. If you started off this week red, don't be discouraged in yourself. Did you keep your losses small? Yeah, that's something to be proud of. Did you close it up and walk away? Did you admit defeat? Yeah, that's another thing to be proud about. Most people cannot admit defeat, and then they just dig their hole deeper and deeper and deeper. The next thing they know, they're down $5,000, and they just in one day gave back weeks worth of work, showing up every day, putting in that screen time. One day they just wiped away 3 weeks of work. Think of it in terms like that, guys. So if you show up, you're getting bad juju, you're not in line and in sync with the market, as I like to say, there's no problem admitting defeat. Tell yourself tomorrow is a new day. I'll try again tomorrow. We're in this for long term, right? I want to live to trade another day. Do not let one trade take you out. Do not let one day take you out. Good job today, guys, in the Discord. As always, keep showing up, doing your thing. It all pays off down the road. You guys see growth over time. I know you guys do. You could all see the potential in this as well. And all right, you guys, as I always say, have that patience, have that discipline, study, study, study. Don't forget, secure that bag, guys. Lock in profits. Always good to secure that bag. Don't be a degenerate gambler and give it all back.